Good morning from New York and welcome to the Coinbase Institutional Markets Call. My name is Ben Floyd. I'm Head of Execution Services here at Coinbase, and I am the lucky one that's going to be your host for today. We have a cracking show that includes all of our usual fantastic updates. We're going to be covering ETF flows. We've seen a reduction in some of the outflows of certain products, which may be one of the reasons behind the grind higher in the last 7 or so days. We have a market update from Georg, a macro update from David, after Powell dashed our hopes of a March cut. Greg is going to cover flows and also has a great slide on perp futures positioning. And then Sid's going to run us through Farcaster growth. I'm sure you've all heard about frames and also the Jupiter airdrop, which is actually, I think, one of the biggest we've seen. So a lot to cover today. One thing that did catch my attention, though, was FTX giving all of their customers money back. But it seems to be a catch. Greg, I'm curious, if you had a choice of getting your money back at today's prices, February 24, versus November 2022, where would you want your crypto valued?
Well, I mean, since crypto's up so much from those from November 2022, you'd obviously be better off if you had your tokens. Unfortunately, though, that's not the way the U.S. bankruptcy system works. And, the creditors are due the value of their assets on the day the bankruptcy was filed. So it's just, how the law works in this instance.
Yeah, so I'm curious what happens if they get more back than the initial creditors, whether that goes to equity holders or anyway, a remarkable result in many ways. Some quick housekeeping. Don't forget to like and subscribe so others learn about the show. If you're watching on YouTube, don't forget to scan the QR code so you can get all of the team's fantastic research free of charge. If you're listening on podcast, all of those links will be on the show notes for you as well. But let's get right into it. George, over to you. What is happening in the markets?
Thanks, Ben. So price action was mostly sideways over the last week in the majors like Bitcoin, ETH, and Sol, and realized vol has also come down a little bit. In Bitcoin, we've basically been just trading around the 100-day moving average over the last 10 days or so. And the market is definitely looking for a story to provide some momentum in either direction. And you can also see that same thing in Bitcoin options, where there has been relatively little demand for optionality in Bitcoin over the last week or so. Having said that, I think potentially looking at the next few months ahead, there's definitely quite a few potential stories that we'll touch on later that can definitely give the market direction in one way or another. On the ETF side, if you go to the next slide, things have improved somewhat. As you mentioned initially, GBTC outflows have been slowing down from, if we look at the week 2 weeks ago, roughly where we had daily outflows to the tune of $400 to $650 million. That slowed down to around $100 to $200 million range per day over the last week or so. So that's been stabilizing, which is good. And if you look at overall net inflow numbers, those have been positive over the last week as well. So we're now standing at roughly $1.8 billion of net inflows across the products year to date. And looking at the trading volume breakdown, BlackRock stands at 25% market share, Fidelity 18% of the trading volume, and GBTC at around 35%.
So George, just going back to your last slide, we had some pretty big movers there. Say is kind of one that just jumped out at me, and also Link. What are some of the reasons behind those moves?
Yeah, so to me, it certainly feels, like the usual narrative-driven rotations, or just capital sort of after a move exhausts itself trying to find a new home. And there's definitely not enough cash around for a broad-based rally. And I think, for instance, you mentioned Jupiter initially with the airdrop there. It certainly, I think, felt a little bit like that might have sucked some liquidity out of some of the other Sol tokens, maybe even Sol itself after that launched. And similarly, I think Say has, for instance, been a little bit unloved as well. So Sol down 7%, Say down 16.5% over the last week. Link has been consolidating for a couple of months. Actually, it was one of the first movers, I would say, of that large altcoin rally that we've seen in Q4. So on the back of that, we essentially seen that up 27%. And another one to mention here as well, optimism, although obviously hasn't been a massive outperformer, up just under 3% over the last 7 days. But it's definitely been in focus with the number of active Farcaster users hitting all-time highs, essentially doing a 10x since Jan 26 after the Frames mini app launch, and that's obviously running on optimism.
Yeah, thanks for that, George. That all makes a ton of sense. I'm curious, with the DeFi Pulse Index down 10%, ETH up 1%, that's like a 11% delta, and those two are typically pretty highly correlated. And any thoughts around that?
Yeah, I mean, it's a tricky one, to be honest, because obviously I think with ETH, right, like if we talk to a lot of clients, everyone seems to think that ETH is going to be the next theme right now, that especially for the people that might have missed to some extent the BTC move. So ETH or ETH ecosystem plays, and hence, for instance, another one, notably, for instance, over the last 24 hours, ENS is up 16%. So we're seeing, again, a replay of what we've seen roughly a month ago, just after the ETF launch. But yeah, we haven't really seen that materialize in a big way, I would say, yet. ETH BTC is still trading at relatively modest levels. And just looking at the DeFi Pulse Index again, I think personally it's more the capital rotations that we've been seeing over the last week or two, and I could definitely imagine us seeing more of that for the foreseeable future, given the absence of this one sort of strong overarching narrative like we had going into the Bitcoin ETFs, for instance.
Yeah, that makes a ton of sense. And just for those, as a quick reminder, DeFi Pulse Index is 24% Lido, 24% Uniswap, 17% Maker, 12% Aave, 10% Synthetics, and then kind of smaller platforms or projects after that. So a big move in Lido or Uniswap or Maker is going to drag that index down pretty significantly. Now, George, what else is happening on the news front?
Yeah, so a couple of interesting stories. We had the Tether Foundation announce annual results, and they actually announced a profit of $2.85 billion for the final quarter of 23, and for the full year, that was $6.2 billion. So that's pretty impressive, and actually 1.85 out of that 2.85 billion from Q4 came from their gold and Bitcoin holdings. So they're right now holding $2.8 billion in Bitcoin. So that's pretty impressive. Another thing I would say to keep an eye on the Genesis front is that Genesis Global filed a motion to sell $1.6 billion in GBTC and ETH. So that could have the potential to put more pressure on the market. So definitely something to keep an eye on. On the miners, I think we spoke about it a couple of calls ago. Obviously, miners are under some pressure if the Bitcoin price doesn't rally materially, and we then have the halving to extend their runway. But there has been some selling, so they've been taking some of their positions off basically since December. So that's an interesting thing. Then, I mean, Mt. Gox, just going to mention it, obviously, that continues to sort of haunt the market, but not a lot of clarity there. And then, as you said, obviously, on the FTX side, looks like users are going to get 100% payout, valued as of the bankruptcy date, though, which puts Bitcoin in the vicinity of $16,000. So it's going to be quite interesting to see how that plays out. But I guess if you look at it from another angle, there's probably some opportunity cost as well, right? So maybe it's better to get it sooner at a worse valuation, as you're going to sort of save yourself additional opportunity cost there, rather than getting another valuation, let's say, whatever that would be, and if that's going to take significantly longer.
Yeah, I think that's totally fair. And also, everyone's looking at like low to high, which is not necessarily fair. And I think also probably most people probably mark this down to zero anyway. So to get anything back at 100%, even if that 100% might have an asterisk next to it, I think it's probably a positive outcome for many. There's some interesting takes. You mentioned Tether. Matt Hoogan from Bitwise. Tether made more money last quarter than Goldman Sachs. Tether at 2.85 billion and Goldman at 2.01. Ryan Selkis. Tether's net profits are now 10% of JP Morgan's. Tether has 50 employees. JP Morgan has 250,000. I mean, I think they say it for themselves. It's been a very interesting business to watch, and that story continues to evolve. Greg, I'd love to bring you in here. I'm curious, from like a market cap perspective, like what else has been happening in the stablecoin space?
Yeah, stables are something we watch quite a bit. They can give you sort of some insight into the health of the crypto markets. We keep a particular eye on USDC's circulating market cap. Reason being is a lot of folks, Western funds, whether they be in Europe or the United States, will use USDC rather than Tether for a variety of reasons. And this market cap has been ticking up. It's not nearly what Tether's is, but the trend is what's important here. And it's been ticking up, off the lows kind of as we, rallied through late 2023 and into this year. So this is something we'll continue to watch. If this asset continues to get to gather dollars, I think that'll be, just one more constructive data point for us.
Thanks, Greg. And just kind of stick around, like in terms of the miners, George, you mentioned, I guess, what happens with the halvening and the miners. Perhaps, Greg, if you kick off, I'm curious how you guys are thinking about that sector as we go into the halvening and what we should be looking out for there.
Yeah, I think, it's going to be tough for the miners. A lot of those that don't have, the highest quality equipment available, through much of last year, they had negative gross margins, never mind, net margins. And now mining is going to get twice as hard. So, we could see them come under pressure. We could obviously see consolidation in the space. And from a flows perspective, I would expect to see a decent amount of what is mined hit the market because they're going to have, expenses in dollars that they need to pay.
No, they looked at like a really solid move in the back end of 2023. David, we'd love to kind of bring you in here. I'm curious kind of how you think about the miners as a sector.
Yeah, I agree with what Greg said. Obviously, like if you reduce the block reward from 6.25 Bitcoin down to 3 1/8, obviously that's going to have an impact on their profit margins, which have historically been fairly thin. So you either need to see a massive increase in Bitcoin prices, or you need to see that they can reduce their overhead costs. But I think the impact that you're going to see to markets, however, aren't going to be quite as large as some may think. And of course, that has to do with just the math behind it, right? You're reducing the amount of rewards that they're actually earning. So when the Bitcoin issuance drops, they only have so much Bitcoin they could actually sell. Of course, that doesn't mean they can't eat into the reserves, which is kind of what George was alluding to earlier. But I would say that what would be more concerning to me would be a scenario where miners need to sell like portions of those unrestricted Bitcoin holdings to finance future operations. And I think that then you would see like a large amount of Bitcoin then potentially being sold. But I don't think that's going to happen in the very near future.
I wonder what happens if we continue to see ordinal growth. Do we see transaction fees increase to take into account the changes of the halvening? I mean, that's like quite a big jump. But George, curious how you would think about that.
Yeah, I mean, I think we spoke about that like when earlier last year, I guess, when that was becoming a bigger theme. But I mean, what I always heard about ordinal specifically is that it's probably an interesting experiment, but the vast majority of takes that I've heard at least were somewhat skeptical as to whether that can, in a sustainable way, push up transactions. I guess another interesting angle, perhaps, could be L2s, right, or like real sort of organic transactions where it's used in a day-to-day life, like Lightning, for instance, right? And I've been reading stuff on Twitter recently after the Satoshi roundtable in the Middle East that apparently there's some development going on there. So maybe that's interesting. But just to touch on the miners again, obviously. One thing to watch will be, I guess, in the quarterlies, which is obviously delayed, just the balance sheets and how they treat that and comparing that to the Q4 results and then to the Q1 results. And another thing, I guess, will be Bitcoin miner reserves. So again, the question is how accurate is the data? You could look at providers like Glassnode or CryptoQuant, for instance, right? But that could give you a better real-time idea as to what they're potentially doing with their holdings.
Yeah, I really like that answer, George. I will say that we actually just published a report on this called Bitcoin Halving and Minor Economics. We published this at the end of January. And I think that something that people don't fully realize is that this is not the first time we've seen fees constituting a high proportion of block rewards. And we actually saw this in 2017, 2018 cycle. We also saw it again in the 2021-22 cycle. And we saw that transaction fees at the time actually constituted around 20% plus in terms of the actual amounts earned by the miners. And you could kind of understand why, right? Intuitively, it makes sense because these happen to be periods of just significant appreciation of Bitcoin prices. So it tended to draw in a lot more network usage. And that, of course, then drives up transaction fees. But I'm not going to undercut the idea of ordinals because it's a big deal. And I would say that, they've been touted as a potential solution for a lot of miners of gaining an alternative to the revenues to just the base fees that they earn in terms of the base rewards, rather, that they earn for securing transactions. But so far, the big concern I have is that it hasn't been, I wouldn't say sustainable, but consistent. We've seen on Ethereum, for example, daily gas used, it tends to be very consistent. So you see that there's not a lot of volatility in terms of how the validators there earn. It does, however, pose a bit of a problem for miners because there's volatility in those Bitcoin ordinals transactions. And that's not entirely surprising, right? We've seen this before with NFTs on Ethereum or other L1s. So George also mentioned L2s, also very promising. But so far, I would say they haven't gained significant traction in just constituting a large portion of those transaction fees. So why is this a problem for the miners? Because if they need to hedge, then it's very, very loppy and uneven, and it makes it very difficult to actually hedge some of the Bitcoin that they have or the Bitcoins that they earn. And I think this composes a bit of a problem, especially in the post-halving period.
Yeah, it's certainly one to watch. I kind of agree, David. There's kind of something there. For all those that were unsure if memes would pass across to Bitcoin, Sotheby's had an auction where a Genesis cat, obviously it's got to be a cat, sells for $254,000, and then 19 lots sold for 1.1 in total. So someone's seeing some value here, for sure. But it's definitely a space to continue to watch. And I guess, as they can add more functionality around more than just NFTs, then maybe that's where you get a slightly smoother curve for fees, as you mentioned, David. Perfect. George, any other last bits on the news that you want to draw attention to?
Maybe just one headline that sort of came up with Google allowing crypto ads again. I mean, I've seen that obviously there's not going to be any crypto ads in the Super Bowl coming up in a week, but it's still, from a retail angle, I guess, quite important that Google is allowing ads again.
Yeah, I mean, I think that's huge, right? Someone correct me here, but Google are probably a top 5 advertiser on the planet, and for them to allow those crypto-related ads, I think is huge. And actually, I think not having a Super Bowl ad is also not a bad thing. I think our ad was fantastic, and there was also some other. The FX ad was also very good, to be fair. But I don't necessarily think we need to see 25 crypto ads during the Super Bowl. And I think if people are being slightly more responsible with their funds for those companies that perhaps don't think about it in the most responsible way, I think. It's not a bad thing to have not so many ads there, but it's great that it's an option in the future. And again, kudos to our marketing team for our ad, because that really was very special. But yeah, moving on. Macro, David. I guess maybe let's start with the kind of your thoughts on the jobs data. That's certainly been getting a lot of conversation in the last week or so.
Yeah, I think that's a good point, Ben, because we saw a surprisingly high headline non-farm payrolls print. And, that was, of course, very surprising. But I think that people kind of missed what was most important about that, which, in my view, tend to be the revisions themselves. And so far, I've been on the view that the labor market itself has been showing signs of cooling. But the revisions we've gotten in the last few months actually suggest that there's been a bit of a spike. Now, how does that kind of sit in juxtaposition to what we've seen in terms of the headlines? Because it's very odd when you see very high profile kind of headlines suggesting that UPS is cutting jobs, for example. You're seeing that really the only places that are actually gaining in terms of workers tends to be healthcare, government. So it's strange to then kind of get these numbers. And by the way, they're not entirely inconsistent with some of the other indicators that we've gotten on this front. So how do you kind of make sense of all of this? Now, part of that tends to be part-time jobs, part-time labor. It was hard to kind of grab those jobs in November than it was in December, for example. But December had its own quirks. Like it was a very, very cold month here in the US, for example. Yet somehow like people were able to get more in terms of like increasing the labor market. Overall, though, I don't think that this changes my view. Like, I think what the Fed said last week at the FOMC meeting is that they are moving rather not moving, but rather the first cut probably won't be in March. Very likely, I think it's probably going to be in May. This is consistent with that idea. I think that, what they've been saying as far as not getting the full picture in terms of the economic activity, how this is with inflation is pertinent. But overall, what matters most to me is still what's going to happen with inflation. And there, I think that there is still meaningful disinflationary trends at work here. I don't think that's changed at all. I still think that very likely we're going to get a soft landing as far as, not making a lot of sacrifices in terms of activity to get that inflation print. But overall, there's this misunderstanding right now about, well, then why would the Fed need to cut rates if, the economy still seems to be doing okay? And here, I think the key point to me is it's doing okay in relative terms compared to what's going on in the rest of the world. But I do think activity is going to be going to start slowing down in the U.S. in earnest and fairly soon. And when we're talking about cuts, like we need to think about things in real terms. Like this, if you do not cut rates and inflation continues to come down, and again, we're talking about disinflation, not deflation in the US, but still like real rates, if they spike because inflation is cooling down, that means if they do not cut rates, that's a problem for the Fed because then you're going to really slow down activity and then you're almost guaranteeing a recession at that point.
Interesting. And so I guess let's like imagine you're in the room with Janet Yellen and Powell. Like how are those two kind of different conversations going to be having from, because they've obviously got slightly different incentives. Like how would they be looking through the end of the year about kind of the rate picture, for example?
Yeah, a question that I get a lot tends to be how do politics, how does the current economic environment, because it's an election year in the U.S., how does that influence the Fed's decision-making process? And of course, the Treasury and the Fed have two very different jobs, and the Treasury's position is to manage things on the fiscal side, and of course, the Fed trying to do it on the monetary side, and those things don't always cooperate. That's in big part what happened in 2023, right? We had pro-cyclical government spending, which is really why activity has been fairly buoyant compared to what the Fed's been doing, which is, of course, tightening rates. And keep in mind that this has been the most aggressive of any central bank out there. So in a large part, that's actually why the Fed has actually more room to cut rates right now than most other central banks, which actually kind of feeds into my view about what's going on in terms of the dollar, for example. I would expect that we're going to have a weaker dollar. It's been kind of climbing over the course of January, and you can kind of see it if you're watching this on YouTube, and you can see the chart. But I think that actually the dollar is poised to kind of go down. But we don't operate in isolation. We're also thinking about what's going on in China, for example. How is that going to impact us? Because China weakening actually means that probably this dollar decline, it's probably going to fall, but actually probably in a more orderly way because, activity abroad doesn't look so hot. So I think that this is kind of what you need to think about if you're different players looking at the economy at the moment.
So you mentioned China there. There were some headlines today that Xi is going to discuss the stock market with financial regulators. Like, what does that mean? Is he going to go in there and say, this has got to stay higher? Like, what does that like mean in practice?
I think that's the concern, because right now we're seeing that China really needs to add further to stimulus, but there's been an unwillingness to do so by the authorities there. And that's really the only way right now that we can see it for China to be able to kind of get them out of this situation, unfortunately, because you cannot reflate the property market. It's in the doldrums. People are concerned about putting their money in property as a store of value in China, for example. So I think that the concern that the authorities have is that this is going to have negative externalities, negative impacts on their stock markets, because, you know, these things kind of have other contagion-like properties to them. My concern right now, though, is that, you know, China is suffering massive FDI decline. There's very little, unless it kind of helps, unless the authorities themselves intervene directly in their economy, very likely the long-term prospects for it just aren't very great. Now, the perverse impact on that, however, for the rest of the world is that very likely China is going to go through a period of deflation. And that deflation will probably be exported to the rest of the world. That's perversely going to be positive for the US's disinflationary trend, for example, probably inside of Europe as well.
David, thanks for that. Question, just bringing it back to crypto. You know, on the desk, we always talk about what's going on in Asia because it's such a massive market. And, you know, looking at just the Chinese economy, the Chinese stock market, could this in a way be beneficial for crypto? Because, and maybe I'm oversimplifying this, but if I'm a Chinese citizen, you know, I'm afraid of buying property because that may devalue, you know, very quickly in my face. I'm afraid of buying stocks because, you know, that may keep trading down. You know, Bitcoin and other crypto seems to be, as odd as it is, maybe a safer investment for them. You know, could we see any flows into our market because of that?
If there were a direct means, or even indirect means, really, of easily getting access to crypto, I would say yes. And I think that we are seeing some of that start to materialize. You know, like we talked last week about how like Hong Kong is trying to come up with ETFs, for example. We've long discussed the idea that there could be something akin to Stock Connect between China and Hong Kong with respect to crypto. But so far, I think those things haven't materialized. And if you're in the upper echelons of, you know, Chinese like wealth holders, for example, like my impression is you probably already have some of the means at your disposal to be able to get access to alternative stores of value outside of what's available to you inside of China. So, you know, I think that there's a possibility that this is going to happen. But, you know, broadly speaking, too, we got to think about how China impacts emerging markets and emerging market demand for crypto as a whole. Because, you know, like these things are not isolated. China forms a very big part of the emerging market economy. And I think there we've seen that because Asia may be impacted, that could maybe not impact the money flows from China directly, but it could impact it from other parts of Asia. Meanwhile, places that are tangential to that, like let's say Latin America, because they have a lot of exports that they like send over to China in terms of like soy crops, copper, other things. You know, like I would say that, you know, they actually are on better footing. In fact, we can see that in the economic data itself in terms of, you know, the disinflationary trend, central banks cutting rates, for example, activity being fairly resilient. So I think that's also something to consider here as well.
I've always been fascinated by the, I guess, the real estate market in China and like these cities that are totally empty. Like, I'd actually be quite keen to like check them out. Like, it almost feels like, what's that film? Is it another imitation game?
It'd be so scary. You're going to be in a giant city that's empty. It's like a horror show.
It is, isn't it? But kind of weird, right? Kind of interesting.
I mean,
anyway,
a lot of these the you know property developers are now just building, but they're not taking any money in. They're just building out the contracts that they had from years ago that they never really got started on. And so that's also another kind of complication that's being adding to the problems in China.
And what about real estate in the US? Obviously, we've been talking about this for a little while, and it's kind of been a quote unquote shoe to potentially drop that hasn't necessarily so far. Like, David, where should we be putting in lower bids in real estate in the US?
That's one part of my economic scenario that I haven't fully come to grips with yet, because this has been part of our view for a while, that the banking sector in the US, we still haven't fully resolved all the problems there. Regional banks, that is, given the problems that we saw in March of last year. And more recently, we saw that NYCB, for example, is, sitting on an uncomfortable commercial real estate kind of position. And that was, hurt its price. But, whether this is going to become a calamity, it's still kind of hard to say. We know that the Fed doesn't necessarily want to re-up on BTFP, for example. That would actually be a lifeline to the regional banks. So, I think that this could potentially still be a concern. If this represents a shock to the economy, then my outlook for a soft landing, for weaker growth, but not a recession, I think that becomes at risk.
Interesting. And I guess obviously we had a bit of a shock in the market last week with some of the US regional banks getting hit very, very hard as a result of this commercial real estate exposure. Like, what are some of the dates that maybe we should be keeping an eye on for potential kind of contagion risk?
Well, March is just going to be the big date, because that's when we come due on BTFP. So, if the Fed follows through and says that they will not re-up on that, then I think that's going to be the biggest concern people are watching for, to see if that has any implications. But it won't be immediate as well. I would say that these things still will take time to kind of play out, to see, what we're going to have a reckoning of, like, well, what are the positions people are sitting on in terms of their U.S. treasuries, for example. How much of that presents a real concern if we see blow up in other parts of these regional banks' portfolios. And because of the changes that we've seen in the banking sector in terms of the tiering and how they've moved up or down on the tiering, like what they have available to them in terms of securing a better position, may be fairly limited. So I think that would be my biggest concern when we look to next month. On the other hand, I think there might be some offsetting factors that may benefit us. For example, I think we're going to also hear from the Fed at the March meeting about their tapering of quantitative tightening, for example. So I think that this could see some changes, because my expectation is that over the course of this year, we will see that rates, that is like 10-year rates, 30-year rates, for example, are still fairly high, even though they've come down. And I think that they're now overextended and really need to come down more sharply.
David, is it too optimistic to think that, let's say we do see a bit of a regional banking crisis and markets are affected as a result of that, to your point earlier on, that the Fed has raised rates to a point where we actually have quite a lot of room here, and they can kind of cut them very quickly to support markets should they need to, especially in an election year, and also when the US is starting to refinance some of its longer term debt as well?
If they saw that as a problem, then maybe. But we saw last year that even though there were concerns surrounding the regional banks in March, for example, that didn't necessarily change their behavior as far as positioning for positioning for the tightening cycle and positioning for their balance sheet. So, even though I think that, yes, you're right, it could be a possibility, I don't necessarily think that that's something they want to pull on, because they want to, as much as possible, kind of reinforce, the resilience of some of these banks, or the perceived resilience that they think they have, rather than trying to go towards like cutting rates aggressively, because that would probably signal a larger problem to the markets and create potential panic. And so that's something that I don't think that as monetary authorities they want to do.
Got it. That makes a ton of sense. Cool. Well, thank you very much, David. Any last bits you want to add on the macro side of things?
No, this has been great. Thanks, Ben.
Cool. Awesome. Greg, over to you on flows. What are we seeing on exchange? And also curious around your thoughts around perps as well.
Yeah, for sure. So exchange volumes continue to taper off from the peak we saw around the ETF launch in mid-January. I would say, speaking to clients on the desk, folks are still active and still very constructive on the market. They're just being more patient in putting their positions on, which I think is why we're seeing lower volumes kind of across the board. Positioning is something we look at quite a bit. And if we go to the next slide, so this is global future open interest. And this basically looks at a Z-score of open interest over the last 6 months, which captures kind of August to the present. And if you look at this, most assets are about one standard deviation away from their average open interest. So there's clearly some long positioning here. We can tell that it's long when we look at the funding rates, which are all around kind of 10 to 12%, some a little higher. So this is just another data point that I would say the market's long, but not overstretched. We're not at 2 or 3 times average levels of open interest. At those levels, I would start to get a little nervous that maybe we've gotten ahead of ourselves. But here, this really jives with what we're hearing when we talk to clients, which is I'm constructive. I believe we have a lot of macro tailwinds this year. I want to be long. But I'm not in any, rush to have some massive position on.
So, Greg, just looking at this, uni obviously is on the negative side, along with one other asset. Like, help me understand that. I feel like it's constantly on the wrong side of these charts.
Yeah. So what this says is, yes, you're right. Uniswap and XRP are the only 2 assets on this chart that have Z scores that are, negative. And that just means that total open interest right now is below its average level over the past 6 months. And those are just slightly negative. So I would sort of rephrase that and say for both Uni and XRP, their open interest is about at its average level that it's seen for the last 6 months. If you look at the funding rate for Uni, it's nearly 12%. XRP, very similar, nearly 12%. So folks are paying to be long. So I don't want anyone to get the wrong idea that this means that people are short these 2 assets. What it means is people are long these assets, expecting price appreciation, but there's no outsized positioning there yet, at least.
Got it. Super. Thanks for explaining that. Now, what about client conversations? What's been top of mind for clients in conversations this last week or so?
Yeah, it's a good question. Obviously, something we look at every day is the ETF flows. And I think it's really good to see that the outflows from the higher cost products are slowing. I think there was just 100 million of outflows yesterday. So that's something that we're watching very closely. When those get to 0, I think that'll be a really good sign. Additionally, you kind of now have a few competing potential narratives coming up. One on Bitcoin, obviously the halvening, which is scheduled to happen kind of, mid-April, I think, last I checked. A lot of folks think that along with the, spot Bitcoin ETFs and the fact that they're not actually on a lot of the wirehouse platforms yet. So that's the Bank of America, Morgan Stanley's, LPL Financial. Once they get on those platforms, combined with the fact that the halvening is generally a bullish event or perceived to be a bullish event, that could be a narrative driving the market forward. The other is Ethereum. Obviously, we have Den Kun coming up. It sort of lacked a narrative last year, and a lot of folks feel that it's underallocated to. Also has an ETF component to it, so there's definitely some thought around that could be the next token to outperform. And then Solana has been on a tear. There's really no reason to see why it wouldn't continue. The Jupiter airdrop went really well. There's also sort of a thought around, maybe Solana will steal some of Ethereum's thunder, in the next part of this cycle. So, kind of trying to figure out where to place your bets, given those three. And then there's obviously the larger ecosystem that, is available to us. That's generally where client conversations are. Overall, though, the client conversations are constructive. People want to be long in at least one of those, if not, all of those pots.
That's great. Perfect. And would you say where is conviction? Is people want to be long, but is conviction still kind of on the lower side, do you think?
Yeah, I would say people are it's something I always hear, or sometimes hear, is I'm cautiously optimistic. And people love to be cautiously optimistic. It's like when you say there's a 60% chance of something, if it happens, you were right. You said it was a 60% chance. And if it doesn't, yeah, I only said there was a 60% chance. So it's like the way to be right, no matter what happens. I'm not hearing a lot of I'm cautiously optimistic. I'm hearing, I'm optimistic. I'm constructive. I think, we're going, prices are going to be higher at the end of the year. Now, the path they take to get there is a little less certain. But for the most part, I would say there's conviction kind of across the board. And maybe that's what we need to be worried about.
Got it. Thank you very much, Greg. I always appreciate your insights. Sid, over to you. Certainly been some exciting things happening in the Farcaster frames world. Can we kick off there?
Yeah, absolutely. We covered this briefly last week. Basically, Farcaster is a decentralized social network that's kind of a mix of Twitter and Reddit. But the difference being that every user gets an on-chain account, an address on Optimism, and that's about it. That's the main thing that's on-chain. Everything else is kind of on their kind of decentralized network, which they call sufficiently decentralized, because it doesn't actually reside on a chain per se. It's just a few nodes called hubs that validate all the casts and likes and reactions and everything else that goes on the social network. So it's pretty fast. Folks don't really know that they're using crypto under the hood. But what's been interesting, what's really kickstarted their growth over the past week, is this launch of this thing called Frames, where within the social feed, basically they've introduced a feature where a developer can have a kind of a square, a rectangle, implementation of any sort of web app logic. So kind of like a mini app that lives within the social feed. So what we've seen, interesting examples come out of this include like frames to mint NFTs, obvious kind of simple frames where you can just click to mint, and then NFT mints run out. And then beyond that, evolving beyond that, token gated experiences and token gated frames where someone can only have access to the content of a frame if they're owning something in their connected address on their Farcaster account. And then also frames to order cookies using Coinbase Commerce to a given person's address, all within the social feed. You just click through the frame and you can order the cookies. There's many other examples. It's kind of created an explosion of developer creativity. A few days ago, the team also released the opportunity for text input on frames. So folks are trying to connect this to LLMs and ChatGPT and try to have logic that runs on a backend and then can also connect to on-chain interactions using frames. So it's just kind of a new UX for crypto that's kind of kickstarted the growth of this. And Farcaster users have grown 10x over the past 2 weeks. I think it's close to 50K users a day now, well over 200K users on the platform.
Amazing. A huge credit to Dan and Varun for putting this up to Coinbase's. I'm curious, firstly, have you tried to order any cookies, and do they taste any good?
I have tried. I'm in London at the moment, so I'm not sure how they're going to get to me, but they're shipping from the States. But
if you want to ship them to a US address, I have a US address. I'm happy to take delivery if that's helpful for you.
Perfect. I'll ask for your address after this, and we can order you some. Or better yet, I'll send you the frame, and you can order it there you go. Frame tester. I also actually, fun fact, I created a frame myself just to try it out over the weekend.
Nice. What did it do? What did your frame do?
Basically, you can enter a token name, and it fetches a price chart for that token within the social feed. So no need to leave the feed for to check prices.
I remember you talking about this like 3 years ago about having that in a Twitter feed actually. So now Frames has allowed you to do that. It's something that you thought about doing a while ago.
Yeah, exactly. And then the logical next step is, of course, trading from within the feed. So you can have a kind of crypto transactional user experience all within the social feed.
And then presumably you could connect that up to Uniswap and then take a fee for sending volume to Uniswap.
Exactly, Uniswap or any other DEX aggregator.
Interesting, very cool. So 50,000 users, is that real users? Is that people gaming it? Are they looking for airdrops? Like, how do you think about that number?
I think so. I think a part of it, in the past few days, there's been a slight increase in, bot style accounts that have grown. The key filter here is people have to pay storage to Farcaster to create an account. Right now, it's just a few dollars in storage for a given year to create an account. It's kind of like an initiation cost that they have to pay in order for the network to store their data, to store all their casts and all their messages. So that kind of limits it a bit from being too spammy, but I am seeing a little bit of accounts pop up that are just repetitively posting different frames.
Interesting. And what are Farcaster using for that storage? Are they using a decentralized protocol for that?
Yeah, they have this thing called hubs, which is basically just anyone can run a hub. You can run it on your laptop currently, and it's basically kind of like nodes, blockchain nodes, except it's not on an actual chain. There's no blocks or transactions. These hubs just all keep a state of the Farcaster data, and then they all verify and validate messages. So a similar structure.
Amazing. Well, I'll check and see if we're allowed to put the link to the frame so people can try and order some cookies, and then they can use your frame as well to check on pricing. It's fascinating to see that one grow. I'm curious now. There's always the potential for an airdrop with crypto protocols. I know that kind of nothing has been said about Farcaster specifically, and I don't know how Dan is thinking about it, but I'm curious, like, what are people speculating that you need to do in order to make yourself eligible for some sort of airdrop?
It's tough to say. To be honest, the ecosystem itself has seen quite a lot of native ecosystem-based tokens launch because Farcaster is similar to Reddit in the sense that folks can create their own channels as well. There's been a channel called DGen where folks who interacted on the channel got airdropped a token called DGen, which has become a sort of de facto meme coin. And folks tip each other for good casts on the platform with DGen. It's kind of a tipping currency as well. So I think we potentially see a lot of these kinds of experiments run on Farcaster, where folks who interact with a frame or who are early or who have quality contributions to the social aspect of a protocol could get airdrops. So a lot of folks are trying to engage positively on the platform, just in case.
Yeah, that makes sense. Awesome. Now, Solana, they have a new phone out. What's the scoop?
Yeah, so Solana, actually very interesting. Earlier today, Solana, the blockchain, had a bit of a downtime for a few hours. Starting at around 10 a.m. UTC and it ended at 3 p.m. UTC today. There was a fix that was deployed by the team to validators to upgrade their client software. But in concurrent with that, there's been pre-orders of their new phone, the Chapter 2 Solana Mobile, which has seen over 60,000 pre-orders already. I think the part of the hype for this is the original Solana phone had tremendous benefits because it came pre-packaged with quite a few apps and then also tokens, including Bonk, which obviously had a meteoric rise over the past year. And so the value of the phone was far justified by the value of the tokens that came with it. So what's interesting with this Chapter 2 phone is there's a leaderboard. The team is kind of conducting a leaderboard of people who refer others to pre-order this phone, and then folks who have the most referrals get a special NFT. They're calling it an Element NFT, and then also anyone who pre-orders also gets a token to represent the fact that they pre-ordered. So I think it's driving a bit of speculative interest in terms of being one of the first actors to pre-order, potentially getting themselves eligible for future airdrops.
Interesting. And have they spoken about functionality of the phone, or what it does differently to the first one?
Nothing specific. I think it's just a newer version of the software, and obviously with phones evolving, it's kind of the base layer of the phone itself is an Android phone. So I think they'll just upgrade the software quite a bit.
Got it. And in terms of the so on Solana, obviously we had the Airdrop this week. I guess how has Solana kind of traded off that, and how has the Airdrop been taken?
So yeah, the airdrop that happened this previous week was for the Jupiter token. It's called JUP, and it's the largest kind of DEX aggregator on Solana, and their volumes went well over $1 billion on the day that the token launched. It was airdropped to several hundreds of thousands of addresses that interacted with the protocol, and the kind of action that we saw on chain. Solana, the chain itself held up pretty well. The wallet, infrastructure, the nodes, everything was operational. What was interesting to see was a lot of flow away from previous meme coins that had sustained a lot of the Solana enthusiasm into Jupiter and into Sol, the native asset as well. So a little bit of a rotation of capital. And Jupiter is still trading currently at a 5 billion fully diluted valuation. And so it's on par with the likes of a uni in terms of airdrop magnitude and impact on the ecosystem. Interesting.
And do you use Jupiter? Like, what's it like?
Yeah, I do. It's very smooth, extremely smooth experience. And what's interesting is a lot of folks who had historically used apps on Solana, most notably, for example, StepIn from the previous crypto cycle where folks were paid to take steps. They had an in-app wallet that executed trades on the back end on Jupiter. So they became eligible for this airdrop as well. So it was kind of a wealth effect for the entire ecosystem, even if they didn't consciously use Jupiter, the product themselves.
So Sid, I'm curious, what else is happening in the Solana ecosystem? Obviously, we've seen the Jupiter airdrop. Are there any other apps that are capturing a lot of people's attention, and is user growth still looking up and to the right?
Yeah, most recently, one app that captured quite a bit of attention was this game called GG.zip, where it was kind of framed as a crypto Hunger Games, where folks could track real-life movements on a map and link it to their Solana addresses and then do various actions. And there's a leaderboard for the game, etc. There's another game on L2s called Crypto the Game, which is also has a similar concept, and a lot of folks are kind of using it as a social sort of leaderboard. So some interesting kind of experiments being run on the chain, and user growth and interest is still pretty high after the airdrop as well. And we'll see if they manage to retain traction.
Cool. And what else are you playing with? Anything fun that's kind of right on the vanguard where you typically operate that we should be looking into?
I think, to be honest, most of the action is on Farcaster right now to see what they come up with next. The team has been shipping every single Friday a new definitive feature, and potentially what's tipped to be next is a linking of Solana addresses to Farcaster accounts, which could be pretty huge as it kind of links two big worlds, ecosystems that are typically not connected, which is the kind of primarily EVM-centric Ethereum ecosystem that Farcaster has kind of grown up in and built its user base in. Fun fact, 67% of Farcaster transactions come via Base at the moment, just because of all the frames building on top of Base. But linking Solana addresses potentially captures a larger user base, and then we see a kind of true app renaissance. So we'll see what that brings.
Amazing. So let's take that a step further. Let's say they do link the two, and you've got frames. Does that allow you to have a frame that would potentially work across both EVM and Solana, and therefore bridging becomes less of a concern? And
so I think the logic on the back end needs to be configured where obviously you need private keys and assets on these chains to execute transactions. So we'll see how they actually implement it. Currently, transaction execution is very simplistic. Frames can only return images, so it's still in a very much 1.0 stage. But what will be interesting is, because when people link their accounts, Farcaster as a social network, it can kind of build an identity map of a user. So activities that folks have done on Solana, whether that's being a recipient of an airdrop, participating in games, etc., can be taken into account along with activities they do on EVM for their identity, and their kind of Web3 passport, which is a kind of concept that several folks have spoken about. So we'll see potentially that brings new ideas for apps, reputation scoring, or apps that take into account both the EVM and Solana activity, and then make use of it.
Amazing. Super cool. Cool. Thank you very much, Sid. That was always a lot of fun, as always. I'm off to order some cookies and check out some prices using your frame. And thanks to everybody today, the fantastic team as usual. And thanks for listening, and have a great week.